Hey everyone, Evelyn here. Today is June 11th, 2026, and Wall Street this week feels like a big-budget Hollywood disaster movie. We have a geopolitical thriller, an inflation horror story, and a sci-fi plot about liquidity getting sucked into a black hole. Let us start with the inflation numbers that just blew up the market. US CPI hit 4.2% year over year. That is the highest level we have seen in exactly 3 years. Core CPI looks okay at 2.9%, but your actual bills tell a different story. Gasoline and energy costs are absolutely flying. Real average hourly earnings just suffered their biggest drop in 3 years. Your paycheck might be growing, but it is losing a sprint against the cost of living. The culprit behind this is the powder keg in the Middle East. An American Apache helicopter was shot down, and President Trump immediately fired back on social media. He declared that Iran has stalled peace talks for too long and must now pay the price. The U.S. military followed up with silent night strikes on radar systems near the Strait of Hormuz. Logically, with the world's energy jugular under threat, crude oil should easily be pushing $150. But oil is just hovering around $90 like nothing happened. Wall Street legend Jeff Curry nailed it. He said, "We are just robbing Peter to pay Paul." The world is frantically draining strategic petroleum reserves to hide the bleeding, but those tanks will eventually run dry. Facing 4.2% inflation, the Federal Reserve is essentially trapped. Next week, the new Fed Chairman Kevin Warsh makes his big debut. He is walking straight into a deeply fractured K-shaped economy. The top tier is throwing billions at AI, while average people are struggling to afford gas. If he hikes rates, he crushes vulnerable consumers and small businesses right into a recession. If he cuts rates, inflation will break loose and set terrifying new records. The overwhelming consensus on Wall Street is that the Fed will just play dead. Expect a 12-0 vote to do absolutely nothing. They are holding their breath and hoping the supply chain fixes itself before the economy completely snaps. This toxic mix of inflation and high rates just dropped a hammer on tech stocks. Capital rotation is unfolding right before our eyes. Look at the chip makers and hardware giants that were flying high a month ago. Broadcom posted genuinely stellar earnings, but the stock still got slammed. Supermicro just announced they need to sell $7 billion in new stock. They have $39 billion in AI server orders, but they need cash to buy expensive NVIDIA chips first. The market hated that, and the stock crashed 28% in a single day. Oracle posted record-breaking cloud revenues across the board, and its stock still tanked 8% after hours. Right now, nearly beating expectations is a failing grade. You might be wondering where all this fleeing tech money is actually going. Look no further than this Friday. SpaceX is going public in the biggest IPO of the century. We are talking about a $1.75 trillion behemoth. Sovereign wealth funds from Saudi Arabia and Kuwait are blindly throwing billions at it, and it is already 4 times oversubscribed. Because SpaceX will be quickly fast-tracked into major indexes, passive funds tracking the NASDAQ 100 are forced to buy it. To find that cash, they have to aggressively sell off their Magnificent Seven holdings. You are watching a violent liquidity squeeze. Fund managers are desperately dumping great tech stocks just to make room for the new king of the market. While tech gets crushed, the old, boring economy is quietly printing money. Transportation stocks like FedEx are holding their ground despite new competition. The funniest story of the week is Cracker Barrel. The country restaurant updated its guidance and announced they are bringing back their classic country ham dinner. The stock surged nearly 30% intraday. It is premium dark comedy, but it proves investors are desperately hunting for safety. Meanwhile, private equity is playing a dangerous game. Blackstone and Apollo just arranged a massive $35 billion financing package for Anthropic. AI infrastructure is so expensive that top tech firms are spending the equivalent of Sweden's GDP. Without a clear path to profitability, this cash-burning game cannot last forever. So how do you survive this wild June storm? First, do not try to catch falling knives. The SpaceX liquidity drain and sticky inflation mean this volatility will likely last all summer. Kevin Warsh will likely speak in circles next week, offering 0 clear signals. The market's patience will be tested, but this is your ultimate window of opportunity. Use this time to hunt for high-quality assets that are getting unfairly punished in the panic. Look for clean balance sheets and companies that actually generate real cash. Do not let the violent swings scare you out of your positions. Stay cool, keep your cash ready, and focus on the real winners. Thanks for tuning in, and stay profitable this week.